In day trading, there are many conflicting concepts. Trend lines are broken, Fibonacci is irrelevant, chart patterns don't work, support and resistance trading is broken. If you are new to the game, it's quite hard to know which concepts are indeed profitable and what is the best approach you should take to make money trading. I'll tell you what worked for me. Confluence. Confluence is when there is more than one signal coming together at the same point in the market. The more technical tools that validate a price move or simply confirm the significance of a price level, the stronger that level is. Today I'm sharing a very simple strategy to day trade and swing trade using critical price levels and 2 moving averages. So like, subscribe, and stick around for the full video. When you find a setup that has the same price signal from multiple methodologies, you have found a high probability trading opportunity, and there is a high chance of the trade working out successfully. Finding a confluence is key and could eliminate noise when it comes to validating a signal. Confluence can be found in all forms of the markets: price patterns, moving averages, pivots, support and resistance levels, trend lines, or Fibonacci levels. When some of these tools meet at a single location on the chart, it is considered a point of confluence. Confluence trading is basically combining more than one trading technique or chart pattern or analysis to increase your odds of winning a trade. I always pay close attention to support and resistance areas. These are price structures which show previous reaction points and are usually used to find turning points or breakouts in a market. There are many price levels that you can trade, from major market boundaries to smaller price structures forming swing lows and highs to huge zones where price comes back regularly. The break and retest pattern is especially important in our strategy. This is where price changes from using a level as support first, and after a breakout, it uses the same level as resistance. And when a resistance level becomes a support. Moving averages are another useful confluence tool because they are very versatile. You can use them as entry filter and only take trades in the direction of the moving average. To time entries on a retest of a moving average during a pullback. Plus, they also serve as dynamic support and resistance. Lately, I've stopped using moving averages which are applied to the close price. I prefer to use 2 moving averages with the same period, in this case 200. The first one is a moving average applied to high prices, and the second one is applied to low prices. This creates a channel which is much better than a simple line. So the more trading techniques you have indicating a certain direction, the higher the probability of the market price going in that direction. The strategy consists in finding areas where critical price levels and the EMA channel converge. One static support and resistance level and a dynamic one, aligning on the same area on a chart. We trade Euro-Yen on the 15-minute time frame. Price is below the 200 EMA channel, so the plan is to short the currency pair when price bounces off the channel. I also see a triple top here and a breakout. The breakout happened at the same time with the breakout below the channel. This area is an important one. It was a support zone, turning into potential resistance, which aligns with the EMA channel. So we found our value zone. If price comes to this confluence area, we'll enter a sell position. stop loss above the EMA channel, and we target the next swing low in the price structure. That's a risk to reward ratio of 3, which is the minimum target you should aim. If you want to maximize profits when price breaks an important level in the price structure, you move your stop loss to lock in profits. Now, I suspect this pullback to our Confluence area also aligns with the Fibonacci level. Just as I thought, it was the 50% Fibonacci retracement, another layer of Confluence. We move to Nvidia on the 5-minute time frame. This is a strong downtrend, with price making lower swing lows, lower swing highs. I also see this major swing low, again of former support, potentially turning into resistance. The Confluence zone is more evident now. It's right here, where the 200 EMA channel and the resistance area meet. If price reaches this zone, we'll go short. Stop loss above the channel, and for our take profit, we'll target the previous swing low in the price structure, a very good risk to reward ratio of 5. Again, an excellent trade, and as in the previous example, let's add a Fibonacci retracement. What do you know? Fibonacci golden zone offered additional resistance. We change markets once again, and we trade DAX index on the 30-minute time frame. I see a strong uptrend, higher swing highs, higher swing lows. Price above the 200 EMA channel, so market conditions favor long trades. Price broke this resistance level, and now we expect it to hold and act as a new support. Price hit the moving average channel in a Confluence area at this support level. When in doubt, add a Fib retracement. Once again, Fibonacci golden zone perfectly aligns with the other Confluence factors. So stop loss below the channel, and we'll aim for the minimum risk to reward ratio of 3. Here's how to manage the trade. Once price breaks an important swing in the price structure, remove the risk from the trade and move your stop to break even. Now we can't lose money. We are in a risk-free trade. In this chart, I see a potential long trade. We have an accumulation zone after a downtrend, and now price broke the upper side of the range, and it also broke the 200 EMA channel. Around this area, we have our potential long trade. Stop loss below the channel. Take profit at the next swing high. Okay, this time we lost the trade. The Confluence zone wasn't strong enough. But let's continue. Maybe we'll find another opportunity. I see a liquidity clear out right here, which tells me this market wants to go higher. Price breaks the EMA channel once again and makes a new high. Let's see if the market will offer us a pullback to the EMA channel. Here it is. We have a support level and the EMA channel, and the 151 round number, which is another Confluence factor. Stop goes below the 200 EMA channel, and we'll set the take profit a few points below this swing high. This setup works when the Confluence zone is part of a chart pattern. In this example, I see a head and shoulders and a breakout. We have the neckline here, and the entry point would be at the retest of this resistance, former support. The 200 EMA channel also offers dynamic resistance. This would be the sweet spot for an entry. Stop loss is placed above the 200 EMA channel. And let's target this swing low, a bigger price move. We'll monitor each swing low in the price structure. Okay, we broke this swing low. I'll move my stop to break even, and now we removed the risk from the trade. Here's another common chart pattern, a double bottom, which was broken to the upside. But the interesting thing was the fact that the breakout occurred at the same time with the breakout above the 200 EMA channel. I also see a major trendline breakout. My intuition says this market wants to go higher. This is the Confluence zone, where different signals are indicating the same thing. Stop loss goes below the channel. This swing high is our final target, a risk-to-reward ratio of 5. Price broke this swing high. This is the moment when we eliminate the risk from our trade. Here I see a double top and a breakout. There's also a breakout below this upper trend line. So chart pattern traders see a potential down move. Moving average traders also see a possible bearish direction. Trendline traders also expect further price decrease. All of these independent forms of analysis indicate a similar price movement. Stop loss placement above the 200 EMA channel as usual, and take profit at this major support, a risk-to-reward ratio of around 3. We remove the risk from the trade right here as price broke this important swing low. Here I see a double top and a breakout below this support line, which now will possibly act as a resistance. Price also broke below the 200 EMA, so further price fall is expected. This would be our Confluence zone. If we apply a Fib retracement, we also observe this aligns perfectly. Now let's wait for price to retest the breakout zone. Okay, that's unlucky. We anticipated a further price decrease, but the retracement to our Confluence zone never came. We only had a minor retracement and price went straight down. It's important to remain disciplined and patient and don't get frustrated or angry. You will see many similar setups and you will wait for a retracement to your Confluence zone, but sometimes you'll miss the opportunity. If you found value and learned something new, leave us a like. This way we'll know if you'd like to see more videos like this one. And check out our Academy program if you want to further level up your trading. Until next time.